There have been a ton of changes to our tax code over these last 48 months, and now a big area of emphasis is on the Schedule A, whether you're taking the standard deduction or the itemized deduction. Now, if you're wondering what exactly even is the standard deduction, what exactly even is the itemized deduction, this is absolutely the video for you. I'm going to be explaining exactly that, what the standard deduction is, what the itemized deduction is, and which one actually makes sense for you to go ahead and take on your tax return. My name is Carrington Dennis. I am a certified enroll agent. Welcome back to my channel. So first, let's start off with the standard deduction. What exactly is it? How much is it? How does it even remotely benefit me? So the standard deduction is the most basic deduction that you can have on your tax return. It's kind of your bare minimum base model. And what do I mean by that? You don't necessarily have to do anything to receive the standard deduction. The standard deduction for 2026 for a single filer is $16,100, meaning I can make $16,100 worth of taxable income, apply my standard deduction to it, and my tax drops to zero. It's that simple, right? Now, it's not always going to be that straightforward, right? That's if you have W-2 income. If you have self-employment income, you're subject to income taxes plus self-employment taxes, right? So yes, maybe my income taxes will go ahead and get wiped out, but my self-employment taxes might not be the case. Okay, so that's the one caveat there. But for the most part, any taxable income that I have up to $16,100 is going to be pretty much wiped out by my standard deduction. That's the most basic deduction that I will have on my tax return. Like I said, it's $16,100 for a single filer, and then it is twice as much if you're a married filing joint. So it is $32,200 if you are married filing joint. Now, if you are married filing separate, it drops you right back down to $16,100. So it's extremely straightforward what that deduction is. It is always going to be deducted from any taxable income that you have on your specific individual tax return. Now, how does itemized deductions get introduced into the mix? Does it, change my standard deduction? Does it throw it off? What happens with an itemized deduction? First off, and this is probably the most important piece of information that you need to get out of this video, your itemized deductions need to outweigh your standard deduction for you to be itemizing in that specific year. Meaning, for you to take the itemized deduction, your itemized deductions need to outweigh your basic standard deduction. So if we're still talking about that single tax filer, my itemized deductions, the total of it, needs to outweigh $16,100 for me to remotely get any additional benefit, right? For me to get any additional benefit from itemizing, that itemized deduction needs to outweigh my standard deduction. That's number one. Now, what exactly is the itemized deductions? It's broken up into pretty much 5 quadrants, right? So the first one is going to be any out-of-pocket medical cost, whether you're paying for dentists, whether you're paying for prescription drugs, whatever the case may be there. Any out-of-pocket medical costs is included in itemized deductions. Number 2 is going to be any state and local income taxes that you're ultimately paying is going to be included as an itemized deduction. Number 3 is going to be any personal taxes that you're ultimately paying. Personal taxes, meaning DMV fees. I am not talking about federal taxes or anything like that. I am just talking, for the most part, about personal property taxes, which for the most part is going to be DMV fees or maybe a registration of a boat, for instance, or something like that. Number 4 is going to be your primary home's mortgage interest, along with your secondary home's mortgage interest as well, right? So those double. And lastly, number 5 is going to be any charitable contributions that you ultimately made. Now, for the most part, I want to say every item on that list has a certain threshold that you need to be over to even remotely get some benefit, right? So the itemized deduction, it's a little bit more nuanced. There's more information that goes into it. It's way more complex than our basic standard deduction, where we're literally just looking at a number and saying, yes, that's your deduction for that current year. So let's go through these 5 that I just mentioned, starting with the medical expenses, right? So like I mentioned, anything that you're coming out of pocket medically wise is going to be something that is included on your itemized deductions. Now, there is a caveat to this. For those medical deductions to start being added into your itemized deduction count, right? Because remember, our itemized deductions is trying to get above 16,100, right? So for me to even start putting money into this itemized deductions bucket, my medical expenses needs to be over 7.5% of my AGI. AGI meaning adjusted gross income. Let's just assume my adjusted gross income is $100,000. That means that I can have medical expenses all the way up to 7,500 and not get any benefit on my itemized deduction side. But any medical expenses that I'm coming out of pocket of that are in excess of $7,500, right, 7.5% of my AGI, that is when it can start to be entered into my itemized deductions bucket. So for the use of this example, let's just say I'm making $100,000 and my medical expenses for the year were $10,000, right? So 7.5% of my 100,000 is 7,500. I had $10,000 of medical expenses. I subtract out that 7,500 and I am left with 2,500 that has now been dropped into my itemized deductions bucket. The next category that I ultimately mention is going to be state and local income taxes. I personally live in California. California has a lot of state taxes, right? So let's just assume that I paid $15,000 worth of state taxes. So $15,000 gets added into my itemized deduction side. Now I'm at 17,500, right? Now I have, let's just say 2 cars and my DMV registration costs, because we're moving on to personal property tax now. My DMV registration cost was an additional $1,000. Now, in my itemized deduction bucket, I'm looking at 18,500, right? Let's drop over to our mortgage interest, right, for my primary home. And on my primary home, I'm paying mortgage interest of, let's just say, $5,000, right? So $5,000 now gets added to my itemized deductions. I'm going from 18,500 to 23,500 now, 23,500. And last but not least, I do church donations. So I donate 10% of my income, and that's an extra $10,000, right? So now my itemized deductions jumps up to 33,500. 33,500 significantly outweighs my 16,100. So which one am I going to take? Am I going to take the standard deduction or am I going to take the itemized deduction? The itemized deduction is nearly double what the standard deduction is for me as the individual. So at this point, I will be taking my itemized deduction. So that is a 30,000 foot view of how the itemized deductions work versus the standard deduction. It's literally just understanding all the different things that go into the itemized deduction side, applying all their little specific rules that go into it as well. Once you've done that, you realize, okay, my itemized deductions is, X, and my standard deduction is Y. Which one is more? Itemized deduction just so happens to be more. That's the one I'm taking on my tax return. Now, what if I did all my itemized deduction calculations and my itemized deductions turned out to be less than what my standard deduction is? Well, then I would take my standard deduction. I want whatever's going to create the biggest deduction for me as the individual, right? So if my itemized deductions outweighs my standard, I'm taking the itemized. If the standard outweighs the itemized deductions, I'm going to be taking my standard deduction. Hopefully you got some value out of this video. I try to explain it in the most simplest format possible. If you got any value, feel free to drop a like and subscribe on this video. I drop videos like this every single week, just trying to educate the masses on some basic tax knowledge. My name is Carrington Dennis. I'm a certified enroll agent. I'll catch you in the next video. Bye for now.